Good morning. I'm Pete Najarian. This is the take on this Monday morning. And oh man, they are really hitting the markets pretty hard right now. We see that. It's brutal. But let's go back to Friday. We started to see this start to transform in the latter part of the week last week. And as we got through the week, after hitting some new all-time highs, we started seeing that selling pressure. And that selling pressure starting to see in the markets off of those all-time highs. We did finish the day on flat on the Dow on Friday. That was Friday alone. But then you look at the week for the NASDAQ and just continued to get hit. It felt like the entire week. Now, it's an amazing move when you can really consider where the NASDAQ was and to where it actually closed. So throughout the week, it was day after day of selling. Finished the day on Friday down about 140, call it 144 points to the downside. That was not the end of it. We still had the 10-year that was moving up 1.8. We still had oil, which had actually touched up towards 80, but then pulled back. We had a volatility index that eased back actually steadily throughout the day and finished underneath 19, which was a little bit surprising based on where we were seeing the markets moving and how they were moving to the downside. So very, very interesting. We're averaging just about 41.5 million contracts per day in the first week of the year. So that's a really, really strong start that comes up right after a huge year in 2021. A good start to the very first week in terms of the volumes themselves. So there were movers. There's no doubt about it. Some monstrous movers. And what were they? High multiple, no multiple names. We've been talking about this for a really long time. And it seems like it's starting to get a little bit of a crescendo right now where we're really seeing more and more selling here. As a matter of fact, today, another great example of that. But technology under fire. It was down about 1%. DocuSign was getting hit. Zoom, Twilio, all these wonderful names, but with very, very high multiples, in some cases, very non-existent multiples as well. Shopify, another one of these names. Okta, another one of these names. All of those under some very, very serious pressure. And then you start to look at the rates and the higher rates. Well, that can be good for the financials, not so good for housing. When you see names like D.R. Horton getting hit to the downside like we did on Friday, Lennar, another one of those. There were winners, though. It wasn't like everything was a loser. You had airlines, you had cruise lines, all of those really doing pretty well. As a matter of fact, American and Carnival Cruise, all these were actually doing pretty well across the board. Lucid, Airbnb, names like that actually surprised me a little bit that they were in positive territory, but they were, and they were moving to the upside along with some of those Chinese names we talk about, NetEase and Baidu and some of those kinds of names. So we get through the weekend, a lot of football. We get into today, and a lot of guys getting fired. And by the way, I am getting involved in this whole thing more than you may think, and we'll talk about that as well. But all that being said, I look at the pre-markets. Market's down about 80 points on the Dow, not so bad. NASDAQ, not too good. Still under huge pressure. It was down about 160 points. Right after the opening, as we started to accelerate into the day, down about 275 points for the Dow, down about 260 points for the NASDAQ. You look over at the S&P, down 55. That just continues to play out as we get a little deeper into the day. We were down about 430 points in the first half hour for the Dow, 340 points for the NASDAQ. We're still down about 350 now for the NASDAQ, so kind of hovering in that area. The Dow, on the other hand, that's been getting hit. Now, it might be a little bit surprising, but when you look at some of the makeup within the Dow itself, and let's remember, it's only 30 stocks. It's why the S&P is probably a far more important gauge, but everybody's still talking about the Dow, so I give you the Dow numbers. Down about 500 points, so that's been accelerating. We were down over 80-plus points on the S&P as well. So this is what makes it so interesting. Last week, we were near 37,000 for the Dow. Now we're a heck of a lot closer and underneath 36,000. Then you look over at the NASDAQ. We were near 16,000. Now we're underneath 14,700. So it gives you a perspective of just how much selling has happened at the early stages of 2022. And a lot of that having to do with different parts of the market, the shifting and inflation and all the different things that everybody's got concerns about. Of course, pandemic. But with crude, it's underneath 79. It was touching up towards 80. Now it's pushing to the low 79, 78. You look over at the 10 years, kind of hovering around that 1.8, but just below that level. Take a look at the volatility index. Now, this says it all. And it's something that we talk about each and every day frequently, but I will be on the halftime report. I'm going to jump in real early with that and talk a little bit about volatility because we're certainly seeing a spike. Up 16% early, up even more than that. Last I looked, we were actually trading over 22 for the volatility index. And as you heard me talking about, we closed on the low end of the volatility index on Friday, and here we are shooting up in the first hour. A lot can change. We all know that. There's news stories, all different things. But at least for the start of the first hour of the day, wow, we are certainly under some pressure. Semiconductors under pressure, down about 2%. Technology down 2%. Consumer discretionary down close to 3%. We are seeing sells everywhere, including the financials, which hadn't been the case. The financials were actually trading pretty well with the 10-year, and with the 10-year at close to call it 1.8 right now, we're actually seeing financials not in the green, which they had in the past, no matter how hard the market was getting hit. But today, everything moved over into the red, but it wasn't very much red with the financials, down about 0.3%, something like that. Huge moves on some of those other category sectors that I just brought up. So no sector right now, at least in the green, everything under pressure. Names like Twilio getting absolutely hammered, down 12%, or excuse me, that is not Twilio. Take-Two Interactive down about 12%. You got names like big ones. You have a game like Nike down 4 or 5%. You've got names like Visa and MasterCard down significantly, as opposed to what we were seeing at least early on. Goldman Sachs, Wells Fargo were in the green, but there are other parts of the financial world that were definitely under some pressure. Airbnb, we were talking about that just from Friday. Well, that was under pressure, down nearly 6%. Costco, which has been on this great run, has a multiple that's pretty daggone high. It makes it a little bit less appealing. Well, that's giving up a little bit of that multiple today because that's a stock that was down about 4% as well. Now, I got two unusuals, and then we'll be out of your hair, and then we'll be back on. And I got a lot of stuff going on today. We got the cash flow portfolio. I'm going to join the guys at WCCO Radio at the top of the hour of this hour, as a matter of fact. And so that should be a lot of fun if you want to catch it streaming. Corey Heppola doing a great job over there with WCCO Radio. And I'm going to hop in on the halftime just for a moment. Not going to do the whole deal, but just going to jump on there and shoot. If we get a chance, maybe we'll even do a little unusual there. It'll be different than what I'm giving you now, because now we're starting with this. Fubo TV. Now, not a name that always comes up, but I can tell you the stock was trading off. It was trading underneath 1340. We had a buyer of 6,000 of this week, the January 14. They're the 15 strike calls. So they expire Friday the 14th. Be the 15 strike calls. They were only about 25 cents up to about 30 cents. Can the stock make that kind of a move? Well, I'll tell you what. We had an unusual option not too terribly long ago on Zynga. Take a look at what that one's doing today. We're very happy about that one because there's a lot of things that are not working. That's one of those that is working. It's not just working. It's working in a big way. Those options went from extremely inexpensive to multiple dollars. We love those kind of trades. All of us do. All of us do. It doesn't mean they all happen like that, but thank goodness you get stocks, you get moves like that. Helps against some of the other ones that maybe aren't working underneath the pressure of the markets that we're seeing. Uber trading right around 40.87. So underneath 41. Now, this is a name that had been hitting and they'd been right, hitting and they'd been right. Now it's gotten hit itself. It was trading 42, 43. Now trading, as I said, 40.87. But somebody out there buying the February 11th strike or February 11th expiring the 45 strike calls. So giving a little bit of time for the stock to maybe get its footing once again and making a move maybe back up to the upside. 4,600 of these Uber February 11 45 calls for $1.15 up to about $1.35. Pretty active there. Interesting to see that. Obviously, there's a whole lot going on. There's a macro picture that's huge. Some of the micro pictures within the options world as well. We are being very, very careful, as we always are, looking at a lot of the different options that are moving out there for us and some of the names that make the most sense, especially given the backdrop that we've got right now. If you don't have that knowledge, you want to get that knowledge, come to the Market Rebellion. We've got great folks here doing an absolutely amazing job educating you to understand the derivatives markets. As I said, first week, averaging 41.5 million contracts a day. That's a monster number, folks. Have a great day of trading. I'll see you at noon.